Welcome to today's webinar. I'm Sophie Lewis, Marketing Executive at Equiteq, and today Ramon Param will be presenting findings from our new Global Management Consulting M&A report. He'll be presenting for about 20 minutes and then we'll do a quick Q&A session at the end. If you've got any questions, you can use the control panel on the right-hand side of the screen to post those to me. Okay, so over to you, Ramon.
Thanks, Sophie. Great. So my name's Ramon Param. I'm an Associate Director in the Market Intelligence and Buyer Coverage team at Equiteq based in our New York office. So a little background on myself. I started my career with the Macquarie Group's corporate finance business in London, advising mainly on buy-side M&A opportunities and restructuring some of Macquarie's distressed assets as part of their managed funds. I then subsequently joined PwC's corporate finance business in London, where I was a founding member of the firm's global corporate development team, advising PwC's global leadership team on inorganic growth strategies, really focused around consulting M&A, including the acquisitions of Booz & Co., now known as Strategy and PRTM. So the Management Consulting M&A report is part of a series of analyses that we undertake covering 5 segments of the knowledge-intensive services industry: management consulting, IT services, media agencies, engineering consulting, and human resources. And we're pleased to say that this year marks our 10th anniversary of the report. The Management Consulting M&A report is a focused review on M&A and equity market trends related to strategy and operational consulting firms, utilizing various publicly available and proprietary data sets to produce it. So the webinar will be looking at the Management Consulting M&A report, discussing an overview of M&A activity, typical deal sizes, regional variations, equity market trends, valuations, and buyer trends after we hand over for some Q&A. So with that background and context, let's jump in and take a look at the findings from the report. So 2016 was a strong year for M&A in the industry. M&A volumes rose by 2% over the year, and median deal sizes rose by 27%. And we're now at a 10-year high for M&A activity in the industry. Now, this was, strong when we think about it in the context of a year of slow global economic growth. According to data from the IMF's World Economic Outlook, global GDP growth was at its lowest level since the financial crisis. And it was also against a backdrop of unsettled political activity. We had the UK's vote to Brexit and obviously the US presidential elections. So, nevertheless, deal activity was robust in the industry. And it was particularly strong in strategy consulting. Last year's major deal in that segment of the market was Accenture's acquisition of Kurt Salmon's retail business. It was also particularly strong in regulatory change and compliance. So IBM's acquisition of Promontory was a major deal in that space. And there was continued strong demand for businesses that are enhanced with advanced analytics tools. Another trend that we observed, which is really driving some of this deal activity that we saw over the year, is convergence in buyer demands. As evidenced by those 2 deals I mentioned, Kurt Salmon and Promontory, which were both, acquired by IT services businesses. So on this table, we have a matrix from our M&A report across all of our 5 segments of the knowledge-intensive services industry. Running across the top are all the buyer groups that we cover across each of our 5 industries. And each of the rows relate to target companies and the industries that they fall into. And ultimately, the dark red is really showing where a buyer group is showing strong demand, strong proportionate demand for M&A outside of their core segment. So a lot of the darker shades of red are really falling in the row for management consulting. So there's a lot of demand outside of buyers' core industries for management consulting capabilities. So a lot of cross-sector appeal in this industry. And what we're seeing really is that's being driven by demand for strategy consulting capabilities, which are often seen as a gateway for buyers in other segments of the market to on-sell their own offerings. And looking at the convergence trends the other way around, management consulting buyers are also placing strong emphasis on deals in IT services, which we're seeing a lot of management consulting buyers grow into, both organically and via acquisition. Now, with respect to average transaction sizes, they grew rapidly this year. So they grew by almost 60% to $111 million. And that was driven by milestone transactions like the sale of Alex Partners by CVC. However, the median deal size was much smaller. It was at $14 million. And as we can see by this graph, there's a substantial amount of activity at smaller sizes. Particularly under $10 million, we've got 28% of transactions that are being undertaken at that level. And that really represents a good source of bolt-on acquisitions for lower and mid-market consulting businesses and also private equity investors. We do typically see that those smaller deals that are usually below $10 million are typically acquired through small mergers or team grabs with little cash involved. So we're typically observing most of the activity involving material cash components occurring above $10 million in deal size. Moving on to regional trends, most of the deal activity was focused on North America. So almost 50% of deals in the industry focused on that region. And that was followed by Europe and then Asia Pacific. Management consulting deal volumes in North America were broadly flat. That was despite deal activity falling in the period just before the presidential elections, and we've seen that rebound sharply after that. In Europe, activity rose, and it was particularly strong in the first quarter of the year. And it fell in the quarter preceding the UK's vote to Brexit. But again, just as we saw in North America after that event, activity rebounded sharply. When we move over to the Asia Pacific and Australasia, we see that activity rose sharply, particularly strong activity in Singapore. And the number of deals and also average deal sizes rose sharply in Australia. And what we're seeing is Australia is a consulting market that's observing strong growth, particularly within areas like digital transformation and within consulting to sector verticals like engineering, mining, and financial services. A lot of hot activity going on there. And when we look at global deal activity, one of the trends that we're seeing is a lot of cross-border M&A. In 2016, that accounted for almost 30% of deals, and that was up from 27% in 2015. Moving on to equity market trends. Equiteq tracks share price performance within the industry through our proprietary index covering the industry. So that's the Equiteq Management Consulting Share Price Index. And that performed very well over the year. It rose over 30%, well outperforming the S&P 500, and ended the year on a comfortable 10-year high. Its performance was supported by notable increases in the share prices of Navigant, FTI, CRA, and also ICF International. So, the message here really is a lot of strong investor confidence from an equity market perspective, as well as in the M&A segment. Now, a lot of that strong investor confidence is also being reflected by robust pricing and valuations in the industry. So as we can see from this chart, over the last few years, pricing has remained pretty robust. In 2016, the average last full year revenue multiple was around 1.4 times revenue. Average last full year EBITDA multiple was over 10 times. So, pretty strong, robust multiples valuations in the industry. It should be noted that those metrics that we are looking at from an M&A perspective are reported and adjusted historic multiples that do vary considerably from deal to deal. So they should really be treated as a comparative guide. Now, when we compare them with the valuations on listed companies, we can see that for listed businesses, valuations have been rising over the last 3 years, in contrast to that more stable picture that we saw for M&A transactions. So this year, the average quoted valuation metric for a listed management consulting business was around 1 times revenue and just under 10 times EBITDA. And as we can see over the year, really matching a lot of the increases in share prices, those valuations have been rising. Now, as listed players enjoy, rising valuations with respect to their quoted valuations, and also rising unused cash balances, they are becoming more competitive for acquisitions in the industry. What we're seeing is that a lot of these management consulting buyers that are listed are looking for new avenues of growth and are able to make earnings accretive acquisitions by paying a discount to their already premium valuation multiples. So when we flip to the next slide, we see that serial buyers of consulting firms, those that have made multiple acquisitions over the last 3 years, were responsible for 40% of deals in 2016. And a lot of those top buyers that are making multiple acquisitions are those listed players. And here we've highlighted a selection of top strategic buyers over 2016, and we have the listed players Huron and Navigant as part of that set. Huron has been rapidly growing through acquisitions over the last few years, and its focus has really been on healthcare. And this sector expansion carried through in 2016 with its acquisitions of My Rounding and HSM, both in the healthcare space. Another interesting deal by Huron that's worth noting is their acquisition of ADI Strategies, and that really exemplifies some of that convergence that we were talking about in those earlier slides, where Huron acquired ADI Strategies, an IT consulting firm, creating one of the largest Oracle applications and analytics practices in the US through that acquisition. Navigant also very acquisitive over 2016. It acquired 3 management consulting businesses across Europe and North America. And that included acquisitions of consulting firms with specialisms in medical technology, energy, sustainability, and also consulting to healthcare providers in the US. Now, the other buyers that we've outlined here as being highly acquisitive throughout the year were the accounting networks. So we've got on the slide Clifton Larson Allen, a US-based accounting firm that made a string of M&A deals throughout the year as it looks to expand its presence across the US. Then we also have shown PwC. They've been acquisitive across IT and management consulting, particularly in Central and Eastern Europe. But what is notable is that their acquisitions generally have flattened. Their reported acquisitions have over the last few years. And particularly in the US, the number of deals that they've made has slowed since their landmark acquisition of Booz & Co. in 2014. And that trend is pretty similar with their competitor Deloitte. Still very acquisitive, particularly in IT services, but their deal flow, particularly in the US and UK, has slowed over the last few years. This is in contrast to BDO, which is really looking to catch up with the big four via acquisition, and has really grown in the US, making 7 acquisitions across accounting and consulting. That was also matched by acquisitions that BDO also made across its global network, and particularly Equiteq in EMEA, making acquisitions in accounting, business advisory, and also in cybersecurity. Flipping over to the next slide, we discussed as part of our buyer research that we published at the end of last year, private equity interest in the consulting industry. Private equity interest is strong, and ultimately can be used as a flexible solution for an owner of a consulting firm to either realize a full exit or a partial value realization. Private equity deals in management consulting specifically accounted for 7.4% of deals in 2016, and that was in contrast to 6.8% in 2015. So there's been a rise in private equity interest in the segment, and that's despite some of the competitive pressure that private equity investors are facing from those cash-rich, highly competitive listed strategic buyers that we discussed on those earlier slides. Now, what's also interesting from this chart is that private equity investors are particularly competitive for deals above $10 million. And as we can see, the proportion of M&A that they are participating in rises as we look at larger transactions. And what we saw over the last year was, milestone deals, particularly at those larger sizes, including Alex Partners, the sale by CVC, which we talked about earlier, as well as the full divestment now of Carlyle's stake in Booz Allen Hamilton, which we believe was completed sometime during 2016. So, landmark transactions like this are expected to have a reaffirming effect on financial buyer interest in this space. So we're expecting in 2017 to see continued private equity interest and a lot more activity from some of these big names in the space. So just wrapping up, 2016 was a strong year for M&A in management consulting, and we're seeing a lot of that strong momentum in 2016 carry through into 2017. There's strong industry drivers like digital disruption and converging buyer demands, which we discussed during the webinar, and we're expecting those to underpin strong M&A activity over the next 12 months. Now, on our website, you will be able to find further information and free sources of advice and information through Equiteq Edge. And that really picks up on some of the trends that we discussed on this presentation. And it also covers 3 pieces of advice on issues faced by owners of consulting businesses that are considering a sale. And if you want to discuss any of those trends in the context of your own growth to exit journey, reach out to our regional teams and they'll be happy to explore these further with you. So that concludes our presentation for today, and I'll open up for some Q&A.
Okay, so we've had a few questions come through. One's about, you talked about accounting networks being acquisitive. How does their approach to acquisitions vary with other buyers?
Great, thanks for that. So I think with accounting buyers, their approach, we've really got to think about that in terms of, their typical structure. Most accounting firms are structured as a loose network of affiliated partnerships that work on a territory basis. So, when it comes to valuation and pricing, that typically means a proportion of the offer will involve some partnership in their network. That's something that we do typically see as being a component of consideration when offers are made by accounting firms. Also, the way an accounting network will view a deal will be on a territory by territory basis. So not looking at exceptions like Booz & Co and Monitor Group, they will typically avoid those larger, complex global transactions, especially at smaller deal sizes where they are typically more difficult for them to integrate and digest, across their global network. The other just point, I guess, to make on the approach of accounting buyers is that they are obviously audit-focused businesses, so they do have regulations with respect to their audit services that they're providing to clients. Now, what that means is that during a transaction involving an accounting buyer, there will be a lot of time spent on reviewing clients within your business, looking at the work that you've undertaken for them. And that could even mean, clients that you're working with currently, but also clients that you've worked with in the past, and, whether any of the services that you've provided will cause a conflict of interest from an audit perspective. So a lot more time spent in the process on that, as opposed to sort of non-accounting buyers.
Okay, thanks for that, Ramon. Next question. If I'm looking on selling to a PE, what are the key things I should consider when positioning my business?
Right, yeah. So we touched on a bit of private equity interest in this industry on the webinar, and also there was a lot of information in our buyer research report where we went out and asked private equity what they're looking for when they're reviewing opportunities in the industry. And one of the key pieces of feedback that we received was that they're looking for consulting offerings which are really enhanced by strong intellectual property, and that intellectual property element was ranked very highly amongst private equity investors in comparison to strategic buyers that we interviewed as part of that buyer research. And in particular, software as a intellectual property that they ranked very highly. So when you're positioning your business to a financial buyer, it's really important to articulate clearly what your intellectual property is and how that feeds into the value of your consulting proposition, because that's going to be an important consideration when they're looking and assessing your business. I think other things just to consider with private equity, they typically are looking for some recurring revenue streams. So where you have repeat clients, where you have long-term relationships, really articulating that and making sure that's coming out when you're positioning your business to a financial buyer is important. And then probably just, I guess, a final point just to make on private equity, they're looking to invest and really grow and expand your business over a 3 to 5 year hold period. So that there should be an emphasis on really understanding where you want to drive your business, where you want to grow and expand it when you receive financial backing from the private equity investor. So, clearly articulating your strategy for doing that will also set you in the best position.
Okay, so next question. What were your findings on the structuring of deals in 2016?
Yep, we did quite a bit of work as part of the overall M&A report, covering the whole of the knowledge-intensive services sector on deal structuring. So we had a look at, what were the deal structures on transactions that were completed over the year. And on average, it was just under 60% of consideration was paid up front on deals completed in the year. And the rest was structured via an earn-out, which was spread over a 2 to 3 year period. Now, what was interesting is when we looked at deal structures on M&A over the year, we compared that with our buyer research that we published at the end of last year. And buyers were telling us that they were looking to target, on average, just under 45% of consideration to be paid up front on their deals. Now, obviously, deal structures vary considerably from deal to deal and depending on the opportunity, but looking at the overall results, there is an indication that buyers are paying more than they'd ideally like to on transactions, and that probably is a reflection of a seller's market for M&A, where buyers are being forced in competitive negotiations to up that upfront consideration that they're having to pay on completed transactions.
Okay, so the next one's about regions. In what regions did most of the cross-border M&A that you talked about occur?
Yeah. So we had a look at cross-border deals on a region-by-region basis. What we found was that especially in the Asia-Pacific region, there was a substantial amount of cross-border M&A. It accounted for accounted for over 50% of deals in that region. And that's in stark contrast to North America, a much more mature region of the consulting industry, where cross-border M&A was a much smaller proportion. It was below 20% of the M&A that was occurring in that market. Now, in Asia, what we feel that's driving a lot of that cross-border activity is a lot of buyers that have already developed in mature markets looking to gain a foothold into new regions, like Australia and Singapore, and even China, which are growing rapidly, and they're looking for opportunities to, make a platform investment in those countries, and really benefit from a lot of the growth that's occurring there. So we feel that's really driving that, big proportion of cross-border M&A that's occurring in Asia. Now, I would say that that's not saying that there isn't a lot of cross-border M&A coming the other direction. We're looking at high-profile deals, and there is a lot of high-profile M&A from big cash-rich buyers in places like India and also Japan, who are looking to put a lot of cash that they've got on their balance sheet to work and acquire in disruptive technologies and in high-growth areas. In places in the US, but as a proportion of total M&A in the US, that cross-border M&A is still a much smaller proportion in comparison to Asia.
Okay, so I think we've got time for one more. In the context of convergence, how should I assess what buyer groups might be interested in my business?
Yeah. So I think when we're looking at convergence from a sort of buyerless perspective, it's really thinking about the synergies involved from the buyer's perspective. So we gave that example of Kurt Salmon being acquired by Accenture earlier, and I think the rationale there really is building for Accenture a strong front-end strategy service, which pulls through a lot of its core IT services. So from an owner's perspective, it's really thinking about who are those adjacent service providers, and particularly who are you partnering with on large transformational projects, particularly in hot areas like digital transformation, where we're seeing lots of activity at that intersection of traditional management consulting, along with media and IT services. A lot of M&A, a lot of convergence there. So really having a think of the synergies, who you're partnering with, and particularly in those hot areas where a lot of that convergence that we talked about is occurring. Okay,
I think that's probably all the time we've got for today. I'm really sorry to those whose questions we didn't answer. Ramon's going to get back to you within the next 24 hours, and hopefully he'll be able to respond to you. If you'd like to discuss any part of the webinar or any aspect of your plans to sell, then please contact me on sophie.lewis@equiteq.com, and I'll make sure the right person gets back in touch with you. I just want to say thanks to everyone for joining us today, and thank you to Ramon for presenting.
Thank you.